All right, guys, welcome back today with another trading video. Today is currently Thursday, and I'm glad that you guys are all tuning in. So basically, this video is going to be mainly about gold. And yeah, so the first thing I want to tell you guys is if you're a gold trader, sorry, it's just the camera moving. If you're a gold trader, I want to share these tips to help you find more setups. It doesn't matter if you trade supply and demand. It doesn't matter if you trade fair value gaps. It doesn't matter what you trade. Smart money concepts, anything that falls in that is good. So the first thing you're going to want to do is we're actually going to go over to this tab, and the reason is because I want to actually show you. I don't know why the camera stopped. What the hell? Hold on, guys. Um, yeah, let's see. Yeah, you're gonna have to probably rewind this because camera is being a bit funny. All right, now it's back on. All right. So yeah, you're gonna have to fast forward some of the video if you're dealing with me trying to figure out this camera. All right, just forget it. So the first thing is trading. All right. So to get your mindset in to have more of a winning mindset and a better mindset for you to trade better, I recommend taking walks. Okay, so if you're not getting enough sunlight, go outside, take more walks, get some fresh air. Because when you're on the charts and you're trying to do and rush things and you're not in the right mindset, that's only going to backfire in your actual trading, and it's going to prevent you from actually making the trades that you guys actually want to make. So yeah, so sunlight is the next thing. Sunlight is important. I even take my laptop outside and I get sunlight every single day because sunlight um, raises your vibration. Sunlight gives you energy to your physical body, so you'll have more energy for clarity. It's good for your brain. So your brain exposure and sunlight is really good for your brain. Eating a better diet is really good for you. So doing things like this is really good for your health. It's really good for your wealth. And also consider bringing your computer to your cafe. So if you're a trader, right, bring your computer, bring your computer to the cafe. There's nothing wrong with just taking your laptop and running down to your local Starbucks or wherever you're at and then trading and looking to take some trades up. There's nothing wrong with that whatsoever. I actually recommend that if you guys aren't doing that. And it allows you to feel, if you work from home, it allows you to get a better feel from a better workplace. So when you take your laptop and you go to places like maybe a restaurant, cafes, and you switch to, it gives you just a better exposure and a better focus environment than always just sitting at your desk. But yeah, that's basically on bringing your computer to the cafe. Yeah, so change negative habits that are holding you back from being the best version of yourself, right? All right. So by change negative habits, I mean, what's holding you back from being the trader that you want to be, right? What's holding you back from showing up to the charts early in the morning or showing up to the charts whenever it's your time for your trading session? What is actually holding you back from doing um, what you want to do as a trader? So if you're something, or you're somebody that works in the morning, or sorry, that trades in the morning, and then you're doing something that's preventing you and allowing you to trade in the morning, then I would recommend changing those habits, because if you continue those negative habits, it can affect your success rate. So by you actually, this is why I'm really getting really personal, because if you actually take a step back and focus all of your attention onto things in your actual life that can potentially make you a better person, you have a better mind, you more confident, that affects on the charts as well. So yeah, getting sunlight, taking your computer to cafes, um, you know, making sure you don't have any negative habits. So if you're doing anything negative like eating bad, doing things that you know you're not maybe supposed to be doing, then I would recommend to stop doing those things, because um, getting into better habits helps you align with who you are supposed to be, and who you are meant to be. And when you change your habits, you start getting better luck with all the trading and all of this. So this is why I wanted to talk to you guys about this before I started the video. And another thing is to focus on the charts, and then the lifestyle will follow. So if you guys are too much focused on the profit, and it's fine if you like that, but when you're focused too much on that, the problem is that when you're trying to actually make money and trade, and then on a weekly basis go on the charts, you're trying to look for all these trading setups, and then because your mindset's so focused on like how can I make a quick buck, you're not able to actually follow the actual rules of your strategy and specifically your risk management, right? So yeah, um, focus on the charts first, go full screen, focus on your actual strategy, and train your brain to remember your strategy. And your consistency is built upon your brain's ability to be trained to do that. So every week, if you have a specific criteria that you follow in your strategy, guys, and you're trading gold, like for me, I have an actual step by step. I like to call it my um, confirmation checklist that I have. And what that does is basically a checklist that gives me the details of my strategy step by step. And it tells me what I'm actually supposed to be doing. So let's actually get into my part of my strategy and in the charts right now, so I can go from sentimental to actually focusing on what I wanted to show you guys here. And if you actually have watched this long, I really think you're going to be successful because of your patience and your attention span. Most people probably clicked off when I was having issues earlier in the video with the camera and stuff, but I'm actually happy that you guys are still staying here and focusing and listening. And yeah, so let's get right into it. So the reason I entered this gold trade right here, this sell trade, is because of two things. Well, more than that, but let's get into the first thing. The trend on gold, it was bearish. I usually don't go on the higher time frames to tell the trend on gold unless it's a long time frame. So by longer time frame, I mean by the long-term time frame. So on the long-term time frame, we all know gold is always going to be bullish, but you can't trade gold just looking on the 4 hour, the 1 hour, blah blah. I mean, some people can, but for me, I find that most of my gold setups are actually on a higher time frame, right? Lower time frame. So what I like to start on is the 3 minute time frame, right? And before we go on the 3 minute time frame, is another way you can tell the trend on gold is the momentum of the candles. We can see that we had all this bullish momentum, right, in the past, but when we came up here at the top of the mountain, right, we were blue, right? We came up here to the top of the mountain, and then once we arrived at the top of the mountain, what started happening? We had a bunch of bearish momentum unloading, sell positions start to come into the market, right? We had this big giant bearish candle. Then it's like, okay, maybe it's going to come tap into this demand zone down here or fair value gap down here. But instead of doing that, we had to tap in, come back up, and then we had more candles come down. We had a wick here looking like the trend was going to reverse, right, on this trend line. Because some people trade trend lines. So they were probably thinking that, oh, I can buy off that trend line. And gold did go up a little bit. But the thing was, after it went up there, if you didn't take profit there, gold went straight down and broke this liquidity and took this liquidity out. I knew it was going to get taken out because I knew we were in an all-time high. And not only that, I went and started on a 3 minute time frame. And when I start on a 3 minute time frame, I zoom out so I can see the most relevant highs and lows. And the most relevant highs and lows that I got were here. I got this current high, this previous low, previous high, previous high. That's letting me know that, okay, there's lower lows and there's higher lows. So if the trend was bullish, there would be higher highs. But since the trend is bearish, there's lower lows. So the first thing that I'm going to do here is I'm going to go ahead and delete all these blue arrows because I want to show you guys something. I want to show you guys that you can actually, here's the first thing that I'm doing. Okay, so I know I'm in a bearish trend. The first thing I want to do is I want to take my current market structure, right? My current price range isn't consolidation. When I say find your current price range first, that means your current price range that you're selling at. So if you're buying in the market, you're buying between a range of a high a price and a lower price. If you're selling in the market, you're selling in between a high and a low. So typically when you sell, you want to sell the highest to make the most. And since there was so much so much volume, and I knew that we could potentially take out where I had circled there, those circles, which stand for liquidity, which are basically popular areas in this strategy, popular areas in the market where retail traders have their stop losses located at. And because of that, there's so much liquidity and money and value in those areas. And that just got taken out, right? So I actually got into this before we took out liquidity, and liquidity is where the money is located at. Look at liquidity as a magnet for money, right? You can just draw liquidity and put a money icon, and then that money icon acts as some sort of magnet, right? And it attracts price. And I got in too because number one, we had this breaker structure here. Okay, so breaker structure, by breaker structure I mean we had a break of this trend line. We had a trend line break, and I'm not saying I trade the trend line break strategy. I don't do trend lines, and I just use it for liquidity. I don't actually trade them. So once we broke, right, price came out and broke this trend line / broke this low of price. That's letting me know, okay, so price is breaking new lows. Price is continuing the trend, right? So if we were a bullish trend and price was continuing to go upward, we're breaking new highs to make a new high. That means price is That means price is continuing higher. And we had price continue lower because price came and broke this previous low. And the result, like all this unhealthy price action, right? I entered right at that exact area where you see that gray block, that candle. I entered on this new leg down. I call them legs. So when you have a giant candle going straight down, I call them legs, right? So we had a leg right here come straight down, and I knew that price, because it came straight down like that, and I thought it was going to retrace and pull back to the top here, but it didn't. Okay, price came back. Price fell down here, and right at this exact point, price drastically dropped another leg, a straight candle downward, came back up, and it's dropping again and dropping more legs into my take profit. So I entered here. Price came up a little bit to retrace that leg / pullback, because you know how the market works. Price can't just go straight down. What does price do? When the price goes down, markets go down, comes back up and goes down. Market can't just come down and go down forever. That's not how Forex or futures trading works. So that candle on a smaller time frame represents the market going down, and I entered here, and the market came back up and retraced here, and then went back and continued. And the take profit that I had set here was the liquidity, which was right here that you're looking at, where the blue arrow is now pointed to these circles. I took profit here because I knew it was going to come all the way to end. We have a support level there. I don't trade support resistance. I just use them for my take profit. And another thing, guys, is when there's U.S. news in the market, that means you can always trade. You can look forward to gold moving, right? So what helps me trade gold is timing. I trade gold between typically 9 a.m. and 11 p.m. And that's typically how I tend to trade gold. If you guys trade gold, you can trade gold whenever you like, but that time to me has the most volume. And because of that, the market expands at that time. So when the market expands, it helps me because if I'm already in a trading setup on gold, it helps that trade setup obviously get into profit. And if I'm trading, let's say I don't find a trade setup, right? And it's during my trade session of 9 a.m. and 11, and it's like 10:30. I'll actually wait between closer to 11 or in the middle, and I'll wait for gold to show some sort of demand or supply, or some sort of breakout of something. I'll wait for some sort of demand or supply to be shown in the market, and then I will actually start trading. And that's, of course, after I've done my analysis of the trend and I did my actual trading strategy. So once I do that, what I typically like to do is I like to do that after I find my market structure. That's what I'm trying to say. I first identify the trend, and then I identify supply and demand. So when I identify supply and demand, I typically am looking for visual for something visual on the screen to let me know that there's demand or supply, and that's what I will usually do. And yeah, guys, so if you're wondering why I'm having all these labels on the chart, the SAO and ST, that's actually from a different type of analysis that I was doing, and that actually has nothing to do with this gold trade. I learned some analysis back then, and I was doing some analysis up here to see if this was something. It was the type of analysis where you study consolidation ranges, and I was just studying that, and then I saw that it expanded, and I was focused on my gold trade. But yeah, guys, first step you want to do is identify your current trend. The next step is identify your potential point of interest. So by a potential point of interest, that means an area that you're potentially interested in trading. And yeah, so here's what you're ideally looking to do whenever you trade gold. Let's say gold, you see that it's in bullish, right? You see you have a high, right? And price is at an all-time high, right? Let's say you're trading gold and gold is currently at a high and prices are up. Prices are up. Everything's green on gold, right? Now that prices are up, a lot of people are going to have FOMO. FOMO stands for fear of missing out. So when there's fear of missing out, what tends to happen is traders will tend to invest at wrong times because they're afraid of missing out. So they invest when the market is at the top, instead of waiting for a pullback or a retracement, which is basically when prices come to cheaper prices before going up to more expensive prices again. And so now I would be patient and I would wait for price to come down into a cheaper zone or slash area, which is down here. And then once price is down here, then I can start looking for maybe potential zones that are my demand zones or fair value gaps or whatever you guys trade. And then I can actually enter off of that, right? Let's say I put my risk reward tool, and I'm only entering off of that because price actually came down to where I wanted to enter. So we're waiting for price to come to us. We're not reacting off of what price is doing. We're waiting for a particular setup to occur, which is by price coming in, um, tapping into our demand zones. And so another key thing is to set alerts. So if you guys are waiting for your trading, if you guys are trading and you're waiting for price to come to your actual entry and you don't want to miss the trade, set another line before your entry and have price actually set off an alert before it reaches your entry in order to let you know that price is approaching your demand zone. And so, yeah, guys, so that's pretty much what you do for buy trades. And the same thing when you're selling. It's the same concept. So right now in gold is bearish. And I'm actually going to delete all the drawings here. Gold is bearish. And I'm waiting for, I already traded. I did my sell trade. I'm expecting gold to either continue upward, obviously at some point. But the point is when, right? The point is when. Gold probably came down and took out that liquidity there because there was probably some fair value gap or fair value gaps lower than that liquidity that gold was tapping into. So if we go to like a higher time frame, like the 30-minute, okay, or something like that, we can see that, okay, there is demand, a demand zone right here, and it's called an order block. And I typically mark them up like this, right? And by the order block is right here. If you're wondering where it's at, it's right here. Okay, 2 engulfing candles injecting the market, injecting capital into the market, and that causes the market to expand, either up or down. And so that usually means that smart money, the banks, institutions, hedge funds, and real life are trading this asset, right? That this is when they were trading it, right? And you could call it manipulation of price if you prefer to. Now I have that line set on my order block, which is basically where I have it targeted towards. And I'm waiting for a potential reversal now because I know we're still in demand. We're still overall gold is bullish, but it's a matter of when. And so what I'm doing now is I'm just identifying potential price levels that gold can reverse from, and I can actually expect price to reverse from, and then look for buying trades on the way back up. So 30-minute, 45-minute, I can go to the 45-minute. I can go to any of these time frames. I can even go to the 15-minute, and I can try to find. I found another one. I found a fair value gap that gold can potentially reverse from right here, where I had the blue arrow pointed to. This fair value gap, right? We had a gap of here. We had price come up, all these candles. We did not have a wick come and fill in inefficient price action. So price came up like that. It went straight up. Price went straight up, but we never came back down to fill in price action. Price just kept going up. We had just a bunch of blue candles. We never had any wicks coming down to tap into this space. If you aren't familiar with fair value gaps are, the inefficient space, it's inefficient price action left behind from a result of the market having so much volume and so much activity going on that the market did not fill in that inefficient price action. Okay, so that's a fair value gap. That's our fair value gap, and we can potentially expect reversals from it, right? So I'm going to actually draw it down here, and I'm actually going to label the gap. And it's important to label the gap. And by label it, I mean I label it the time frame that you found the gap on. So right now we are on the 30-minute time frame. So I'm going to put 30. So I know that if I'm on a different time frame, I know that where that demand zone was from. So when I'm doing analysis later and I look at that demand zone, I'm saying, okay, where did that fair value gap come from? Where did I draw that from? And then I see the 30 there, and then I'm like, okay, so now I see the 30, and now I know that that was on a 30-minute time frame. And so right now, price is there's a gap right there. Price is tapping in. Price didn't actually tap all the way into the gap, so we could still have price come back down and tap into that gap more, and also the order block below until we have a change in the trend. So since I already sold gold high, I'm not actually looking to sell gold anymore. I'm actually looking to buy gold now because prices are low now, and no one's buying gold. And prices are going to reverse soon, and we're going to continue that uptrend. So this is all I wanted to really explain to you guys in this video. I hope you guys got value out of this. And again, I'm waiting for gold to break these highs, right, and show some demand before I buy again. So yeah, thank you guys for this video. I appreciate you guys for watching it. I'm uploading it on YouTube now. And yeah, I have a free Discord if you're interested in connecting with me, if you're interested in seeing my trade setups that I take every single day. If that's something you're interested in, join the Discord. It's free. And yeah, I don't have a course or anything. I just do one-on-one. If you guys are interested in that too as well, you can go ahead and see about that. Feel free to browse my YouTube channel, watch more videos, message me, and yeah, peace out.